The last several years has seen plant-based products soar in popularity, with the likes of companies like Beyond Meat catching so much public attention. But with this hypergrowth comes a unique challenge they all must face: supplying the raw ingredients to keep up with this rapidly expanding movement. That's why Eat Well Investment Group has built a true vertically integrated plant-based company, and I'm excited to bring on Mark Need, President and Director, to take a deep dive into his company. Mark, welcome.
Brandon, great to be with you.
Absolutely. And I'm excited about this. It's a very interesting company. But before we get into what your company does and all these different things, going through money, we'll go through the share structure, all of that. I'd like to start off with diving into the experience of your team first, as although the change of investment strategy for your company may be new, that's far from the case for the industry experts that you brought together. Can you give us investors a background into your work experience, but also some of the individuals you brought together to lead Eat Well Group?
Absolutely. Listen, you've actually hit on something pretty critical. We're not opportunists who've come into the space. Actually, across our management team are literally decades, multiple decades of leadership in plant-based foods, financing, commercial architecture, global business development, and literally building facilities to make more plant-based foods available to more people. I'll start with myself briefly. I'm over a 20-year CPG executive. I've been doing this long enough that I could say I've been doing this long enough now. And I joke that I started my career at the original plant-based food business, also known as the Quaker Oats Company. So I worked in a variety of brand management type roles at big iconic household brand named businesses like Gatorade, like Quaker. I've actually been in over 24 different consumer categories and have been in a variety of roles, from corporate strategy to M&A and leadership and executive management. But I'm just one of the key folks across our team, whether it's our finance lead, Mr. Pat Dunn, who's was involved in building the Verdient Company, with Mark Coles, our chief investment officer, that eventually had an exit to Ingredion, which is one of the top Fortune 500 plant-based food ingredient companies today. Barry Dodato, who is our VP of Business Development, who's worked through ultra-high net worth global business development, strategic architecture deals, and our financing partners. We have literally several decades of building businesses, architecting deals, and specifically in plant-based. About 5 or 6 years ago, some of our team members were investing in Beyond when people had never heard of it, and they were just beside themselves at a valuation of $200 million. Well, you know the rest of the story today. In fact, we were early investors in players like Beyond to the tune of 50 to 75 million was the basket of funds we deployed. Today, that's dwarfed. It's literally billions of dollars in 2021 that have been deployed in this space. But what we bring to the table is we've made a lot of the right mistakes. Candidly, we've known how to make investments in players that have won. We also know where there are gaps in the chain. I know we're going to talk about that in a minute, how we built design in the vertical chain. But the other piece I want to hit with our team is these investments we've made in Belle Pulses and Sapientia, we'll talk about them in a moment, bring together some absolute rock stars when it comes to plant-based foods. Tony and Francis Gaudet are the brothers who've run this 4-decade-long business called Belle Pulse. It is a strong, profitable, well-run business, the crown jewel of the prairies in Canada, we call it. And then we have Dr. Gino Bertone, who is a veteran of Frito-Lay, one of their leading food scientists who invented the Twisted Cheeto, who decided it's time to make functional foods like vegan-based Cheetos, which is what we acquired as part of his IP portfolio with Sapientia. So without exaggeration, we'd say we've got about 100 years of experience. We've learned all the right things. We know what the hard mistakes are. And we bring, I would argue, a level of not just professional know-how, but deep relationships in the space, whether they're commercial, whether they're global. Usually when someone asks us, do you know about this item or that one, we've already not just known about it, but we know the people behind it. And the other bit, I think, is we understand how to look at fiscal discipline. Listen, we're building a long-term successful company. We understand the play between a gross margin and an EBITDA margin. We're not entrepreneurs who just started. We love entrepreneurs and we love bringing them on board. We'll be doing a lot of that in the foreseeable future. But I think our management team brings something that's equally as powerful as any of the other world-class operators you have in the space. And we're delighted because a lot of these folks are our friends. Plant-based foods is a long-term, it's a secular trend that we're just very excited to continue our growth in.
Yeah, and I appreciate you going through that in detail, because that's why I want to start with that question. A lot of people are getting into this space, and it is going to be a massively growing space throughout the next few years. Already has been for several years, but it always comes down to who are the management. You're not just someone who's just jumping into this. You're guys who've done this many times before with some of the biggest companies that are out there now coming together to make a fully vertically integrated company. And I want to focus on that now because we're going to talk about the full overview of your company, but more specifically, why going vertically integrated is so important. So if you don't mind, if you can go into that, you mentioned some of the companies already. If you can give us a brief overview of your company, but then most specifically, why vertically integrated and how you are vertically integrated.
This is one of the most important things I think we're bringing to the table. We are building vertical integration into the design now. You said it well, and the folks like Beyond have to disclose risks to their revenue are based on the supply. It's the pricing, it's the quality, and it's the quantity. Because we've been in the space squarely for over a decade, we actually saw these problems in living color, and we saw them coming. So when we are building this platform that's now Eat Well Investment Group, we decided to design the business to be vertically integrated. So what we talk about is scale supply, led by food tech with commercial agility. That scale supply led by food tech with commercial agility gives us a platform from the beginnings so we can articulate our investment thesis very clearly. We know where the levers are for top line growth. We know where the discipline will be in margin. And I would say most importantly, we're marrying upstream and downstream. And you say, wow, that sounds like a lot of buzzwords. Let me just make it as clear as possible. We're close to the farmer. So by investing in Belle, I'm going to talk about how we're close to the farm and we've solved scale supply first. We're also close to the end consumer. And historically, those groups in plant-based foods were not bridged well. So our bridging across these folks keeps us in very real contact with the farmers and what's the next big trend, literally coming from the farms, literally coming from academia, literally at a sector level interest with governments and food security, which we care a lot about, as well as what is the consumer doing? What does the world look like in e-commerce or D2C? So with that in mind, we solved the biggest problem first, and that's Belle Pulses. Belle, as I mentioned earlier, is a 4-decade legacy business run by some of the best people you'll meet in Canada. And I say that with quite a premium because I met so many wonderful Canadians in my career and through this process. But Tony and Francis have built a pulse processing facility that is feedstock agnostic. What does that mean? It means we don't just do yellow peas or green peas. We do fava beans. We do chickpeas. That's important because as the technology downstream grows, as we get smarter about all the things God put in these little lentils and these fava beans, we know how to optimize for texture, for flavor, for appearance, for processing. When our food tech or end consumer products talk to our friends at Belle Pulses, they can pivot. So I spoke to you about scale supply. We are networked with over 3,000 farmers. We are networked with universities, with seed geneticists. We actually understand what we're going to grow the next season, and the one after that, we can also look 5 years down. That's critical. So we've programmed that in from the beginning. Belle is a healthy business with over 40% gross margin. We're distributed in over 35 countries. One of the top sellers even into the pet food space with plant-based pet food. So we're people and pet. And as I mentioned before, we are feedstock agnostic. Lots of heart and passion for the growth in this business. We are expanding contracts as we speak because the secular trends are still moving from first inning to second inning. So Belle has an exciting future ahead of it. What we have with Sapientia is a food tech-driven incubator, is what we'd call it at this point. It is a young business. It is literally a few years and low 7 figures, so a few $1 million of investment in articulating and developing plant-based chips or Cheetos. And these are functional now. And I'm going to come back to that in just a moment. But what matters is we've taken Dr. Bertone, who's joined our team as our Chief Technology Officer. It's rare that you hear that term in a food company, but we're doing that. We're leading with food tech. And he's an extrusion expert, one of the leading extrusion experts in North America, if not worldwide. And our network is worldwide. Actually, he and I were on calls with Japan and with Italy last week, talking about the next level of extrusion processing with highly functional plant-based proteins. With that IP, there are at least 2 important components for your investors and your audience. Number 1, this is real IP now. We don't have to wait 3, 4, 5 years to monetize. We know our friends who are deep in the R&D tech space. They are folks we've known for a long time and have invested with, but we also know that those are going to get monetized several years out. Our Vegan Cheeto, is going to be rolling out at the Federated Co-op at the end of this year. So we will test pilot in market later this year, and we will quickly launch into e-commerce as well. So we will get real responses from the consumer. Just for perspective, that Twisted Cheeto did $200 million in its first year. Now that's a Frito-Lay infrastructure and system, so we are jealous for that. But the truth is, we have food tech that will commercialize now. The second piece I want to add to it, Brandon, that we're designing it from the beginning, and as part of the secular trend we're looking at. For years in the food business, folks talked about foods that were fun for you and foods that were less bad for you. Absence of negatives would be what the foodies call it. We're bringing presence of positives. So our vegan Cheetos have up to 4 times as much protein as the existing plays in snacking today. And we also are leading with snacking, because if I were to marry up any other food trend next to plant-based, it's snacking. We're all out of time. We're all running from one thing to the next. Even in a post-COVID environment, we need to be able to eat on the go, and we're tired of being tired. So we want functional snacks that go the distance with us and just happen to be delicious. Those are the 2 key acquisitions and investments we've made now, and there will continue to be a pipeline of investment acquisition as you hear from us in the foreseeable future.
Yeah, it's very exciting, especially on the snack side, because I'm probably like one of the target markets for your company for many, where I love my meat. I truly do. But at the same time, if there are products out there that are healthy, that are natural, and that can give you a lot of protein and nutrients and taste good, I'm more than open to it. I'm actually excited for it. So excited to see more products come from there. And with all these products and with everything you just mentioned prior about your management team and about the business, the next comes the money side of things. As an investor, you always need to understand that side. So now we have a good understanding of who will be leading everything and how this will be conducted with your company as you continue to grow. I'd like to switch that focus to the money side of your business. You forecasted to generate $60 million in revenue this year and around $15 million in gross profit. How will you be achieving these numbers, and what do you see this company growing into over the coming months and years?
Well, that's all fair and absolutely the right way to do this. We found that you can be doing a lot of good for the planet and good for people and good for health, and also doing well economically. We're going to achieve this growth rate this year by really being able to leverage multiple of these sort of underpinning trends of plant-based foods. The first thing I mentioned is the functionality. So plant-based protein, the reason people love pulses like peas and fava beans are because of the protein content. The second piece we're finding is that the key players that are one step downstream from us, at Belle, for example, folks like the ingredient type of customers who buy from us are seeing globally increasing demand. So we are playing a larger role in their upstream processing, storing, cleaning, and even milling. So what does that mean? It means we're expanding with existing customers, and it means we're also leveraging the latest pulses. Now, I can't go into everything because there's news that we don't want our competitors to hear, but there's news that we'll be sharing with you guys in the next 6 months to be certain. So number 1 is growing with the existing customers, and number 2 is by expanding our services. Corporate strategy 101 is maximize what you do well. And at Belle in particular, we're very excited about the way the team has built agility into their model. There's a disciplined breadth. So I'm not naming 30 different types of products, even though we're in 35 different countries. The second piece that is really meaningful for us is we will be heading into the marketplace, as I mentioned, later this year with Sapientia, by test piloting these vegan Cheetos, by developing a D2C e-commerce component of this business. What the investor needs to look at for us really is recognizing there are years of historical real returns on these businesses. So when you look at some of the competitors today, when you look at all the comps in the market, they're asking you to come alongside for the ride, and we're friends, like I say, with those, but there's a much longer burn rate. We are here today. We are here today with this projected $60 million in revenue. We're here today with a projected $15 million in gross profit. We are really off to the races in the busy part of the season right now. We hope to have very good news for you as we close out the next quarter. But I would say at this point, the team is extremely busy because demand is very, very high, and we don't see that slowing at any point.
Great to hear. And I'm sure as investors are just starting to hear about their story or continuing to hear about the story. I'm sure they're excited to hear that as well. Just before I let you go, I do want to ask one more question for those newer investors specifically on the stock side of things. After completing the Belle Pulses acquisition, your cap structure sits at about 111 million shares outstanding with 65 million profit interest shares. Can you give us a breakdown of those, if there's any, share unlocks that are coming on due for investors, but more specifically, what do you mean by profit interest shares?
Sure thing. The profits interest is really a way to keep the management and senior leadership team incentivized over the long term. We are a buy and hold, build for the long term company because, as I said earlier, this is the beginning of the next 20-year trend. We're going to be talking about plant-based foods 20 years from now, the way we talk about probiotics today, which actually showed up about 30 years ago in yogurts that help you feel better. So with that, our profits interest is structured against a 2-year escrow release. And so what that means is our management team will continue to drive this business for the long run. And investors can be assured that we're here to keep building out the platform. Incentives were structured in such a way that there are no early exits.
Yeah, fantastic. And I believe with the 111 million, you haven't done any specific raises recently. So I don't believe there's any immediate unlocks coming out on investors either as well. Am I correct by saying that?
Correct. That's correct.
Perfect. Well, Mark, really excited about everything that you're putting together, both as an investor, but as an individual who's always trying to eat healthier. If you can give the products, and they're, like I said earlier, they're good for you. There's a lot of protein in there, and you can take you away from eating, say, Lay's potato chips. Not to pick on a brand, but something that's higher in fats. I think a lot of people will start doing that, especially with everything that's been going on with the pandemic. People are paying attention more to their health. So very, very excited to see what you have in store here. Thank you for your time. I look forward to being able to speak to you again in the near future to discuss all the different news releases and things to come with your company. So thank you very much.
Thank you, Brandon. We'll be excited to come back and share all the good news.